If you have been struggling to gain consistency in forex trading, this video is for you. And the reason why you are not getting consistency is just because you don't understand the direction you should be taking trades in every single day. You don't know when the market is bullish, you don't know when the market is bearish. So in this video, I'm going to put an end to that misery. At the end of this video, you'll be able to understand where price is heading to and where there's a possible reversal in the overall trend of the market. I'm also going to show you what you need to be focusing on, and what I will show you today is called order flow, or you can call it institutional order flow. And yes, it's not that kind of institutional order flow you have been taught. I can guarantee you that. I'm going to show you why that particular order flow isn't that good for you and why you should seek this new method I am bringing in. First thing first, what is order flow? Order flow simply means the direction of the market, where the money is going to. If the money is going bearish, that means the order flow is bearish. And if institutions are buying up, that means the order flow is what? Bullish. There are simple criteria you can use to determine the order flow, and I'm going to explain it to you. What you need to do is using the opening price strategy to determine order flow. Now, we have two types of opening price. We have the reversal opening price and we have the continuation opening price. Reversal opening price is when a price moves in the opposite direction from the previous candle. Okay, in this case, we have a previous candle here, a blue candle, which signifies a bullish candle. Then the next candle is what? Bearish. That opening price that created that bearish candle is the what? The reversal opening price. Simple. It simply reverses the initial candle push up. The other one is a continuation opening price. For the same bearish example, we have the bearish candle coming down and the next candle push down. That opening price there that pushed this candle down is the continuation opening price. So this is for a bearish example. For the bullish example, we have here a red candle signifying that the price is going lower. Then immediately we have a bullish candle. The opening price of this bullish candle here simply signifies what? The reversal opening price. And for the continuation opening price, we have a bullish candle, and immediately after that bullish candle we have a continuation of that bullish candle. So that opening price there is the what? The continuation opening price. So the question is, how do you use this information to determine order flow? But before I go into that, I would like to show you why you should not be targeting the highs and lows as areas where you want market to take. For example, if you have this particular high now, okay, and we have the low that produce, most people teach you that when the market breaks highs, that means the order flow is bullish. Okay, for example, you have a chart like this. This is what you'll be taught on YouTube. Okay, they will in the form of looking at the structure, that the structure will give you the order flow. All right, when you break structure to the upside, that means the order flow is bullish. And in this case, the high here is simply this weak high. All right, this high, and the low is the low here. In this case, a swing low, swing high, swing low. And when price keep taking out the swing high, okay, and the swing low is protected, that is when you have institutional order flow. And also when price is breaking the swing lows, okay, price is breaking the swing lows just like this, that means the order flow is bearish. Now, I don't want to totally condemn this, but I've been using this for a long time and I understand the flaws. Okay, and that is why I'm coming out with something different, something more precise to let you know order flow. Now let me show you the flaws of this. If you take a look at this, for example, in a single candle, let's take a look at this candle here. In a single candle, the most important price within that single candle is your opening price. Okay, this is the most important price. This is what happens when this market opens on this day. This was the price, okay, that institution were willing to either take a buy or a sell. If the institution wants to continue pushing higher, price will not close below this. Okay, if price close below this, that means the institution wants to push price even lower. Okay, so how do you know the order flow? That means when this market opens, price push up to this point, to this high here. This high is considered an illusion. Okay, that is the highest price that the market traded to on that day. So this highest price here is an illusion. All right, the main price is simply this. So price have to manipulate up. All right, manipulate up, because most people tend to buy when they see, when the market opens and then start giving you a blue candle. You can see that blue candle indicates that price wants to go higher, and a lot of people were involved in this buy up until price got here and then reverses. Then from there it took some days to go lower. Okay, same thing with the lows. All right, all these lows are simply an illusion. Okay, your closing and your opening price are the key prices you need to know. The reason is because your closing price starts the opening price. Okay, that is why these are crucial when it comes to decision making with the institution. So how do you use this to gauge the order flow? I'm going to give you an illustration with forex, with gold, with indices. All right, so that you understand how to read the order flow. And also the best time frame to look for your order flow are simply the higher time frame. And when I say higher time frame, I'm talking about the daily, weekly and monthly are the best time frame to look for order flow. Anything below that will constitute noise. Okay, so what that means is that you cannot determine the order flow in the lower time frame, and each time frame has its own specific need and requirement, specific duties it does. So the higher time frame helps you with the order flow, in this case your direction. Where do you think the market is heading to? And the lower time frame simply tells you where you should be engaged in. Where should you come into the market? When are you buying? When are you selling? And the lowest time frame, there's already a lower and the lowest time frame. Lowest time frame simply talks about the language with the market speak. For example, if you want to know if market will respect a particular level, you can gauge an understanding from the lower time frame. Maybe that will be a topic for another day. If you need that, put it in the comment section. Okay, let's take a look at the order flow on the Euro USD chart on the weekly, daily and monthly. So let's start from the monthly, and then let's just start from like this, from this point, which is when it's 2023 July. Okay, came down to this point October 2023, and then where we are currently. So let's simply look at how to know that the order flow is bearish in this case. All right, so what you need to do is, the only way to know that the order flow is bearish is that your reversal opening price, in this case, which we might call resistant, do not get violated. Meaning, if you have a close above it, meaning the moment you have a close above this opening price, that means that the order flow wants to turn bullish. Now let me simply warn you, there might not be 100% perfection in that, okay, but I'm going to show you from the examples that we have. So starting from here, you can see we have printed in this high here, and this is the low here. This is the low. Now this is the low that produces this high, because in between them we always have what? Continuation opening price. So for this order flow to shift bearish, there's what we call the major order flow should be taken. Okay, in this case, this low here is the major order flow. Once this level is gone, then we can say that the order flow is bearish. Now, so let's take a look at it. This is the high that was produced. This is another high here. As long as this high gets respected, okay, well, our order flow is bearish. But in this case, this is simply a minor order flow. Minor order flow within this time frame, because the major order flow is when this particular level gives way. Okay, so when price does something like this within here, you know, by minor structure, that's what I mean. Okay, so in this case, we are breaking the support, the reversal opening price support. We are breaking them to the downside, and we are keeping the resistance. So as long as the resistance, in this case we are looking bearish, the resistance must be intact. As long as that resistance is intact, the order flow is bearish. That means we are attacking the support. The support will be taken out. So let's keep looking at this. In this case, this resistance created this, and the moment this is broken, we keep going lower. So in this case, from here down to taking out this, we have minor order flows within the major order flow. And how do you spot major order flow? Is simply looking at the range, the lowest opening price, reverse opening price, and the highest opening price, without any one in between. Okay, so as you can see, we keep respecting the resistance here. You can see price try to come up above here. Price tried to come above here. We didn't break it. All right, so these are key areas. What that means is that the order flow is bearish. You keep looking at the lows. Now, something important you need to understand here. So this point here, we have price close above this. Immediately this got broken. All right, so when you see this, we have a new range you need to look at. For price to continue going higher, it needs to break the resistance and protect the support. Okay, so in this particular instance, you can be looking for bullish prices in here. Why? Because we have taken out the resistance here. All right, then immediately you start looking for bullish case, but in this case, that order flow got broken. You can see that simply means market was trying to manipulate within here, and it's okay. It's okay. All right, but the key is that as long as this high here is being protected, then we don't have a shift. So let's continue going. In this case, we created a low, created a resistance here, a low. We broke above that resistance, but this did not hold. The support did not hold, so we continue going lower. We continue going lower. Okay, we break below support. In this case, we broke below support. We created this last one here. Then finally we took out this resistance. Now watch the difference between this and this other one that we took out. If you notice, this was the support, the original support that took out that levels. Okay, so your main goal is that as price keep trading below, you make sure that price do not close below this support. And as you can see, we didn't close below that support. Price push higher, taking out resistance. Okay, before it did that, it created a minor order flow in here. So in this case, this was where the order flow shifted, and we have been bullish. We protected, the support is protected here, protected. We push higher, close above this. In this case now, you can see that our support are protected. So in this particular level here, we push higher, so this move here tempted to change the order flow. So the moment you see this, you keep selling. That means the order flow is bearish for now. And then what is the resistance that produces this one? This is the resistance that produces that. Okay, this is the resistance that produces that order flow. All right, so you need this resistance to get to what? To be respected. But the moment we close above that resistance, all right, we tend to continue going higher. Now sometimes it might look a bit complex just because the market does what it needs to do, but with this you can easily gauge the order flows by just simply looking at the opening price break of what? Support and resistance. So that is for the daily. You see a lot of this much in the daily time frame, but most times in the weekly the order flow are always cleaner. All right, so we are going to look at the weekly time frame. So looking at the weekly, say from that same level, if possible, this is from February. Okay, you can see now, I don't want to use all of this. Okay, you can see, let's just pick one from any zone, any price time. Now we can see all these high are being what? Protected until we break it. The moment we broke this high here, this resistance here, you can see this is the low. Price became what? Bullish until we close below. All right, when we close below, you start looking for bearish trades. Okay, I will explain why you can see a bullish push here. This is simply you trying to gauge the direction just by looking at what price is doing currently. So in this case, this is the low that we don't want price to take. All right, so right now price close above this, 1 minute. Price close above this with this. Now as a result of a break below, you can start selling from here. You can see, you can start selling, and then watch out from this. Price broke below, you keep selling. Price broke below, but what can you see here? We have a change in order flow in here. The moment we took out this, we have a change in order flow, and you can see that the resistance were taken while the support are intact. So these are one way. If price keep coming down to the support, you look for buy. So we are definitely looking for price to close above this because of the order flow is bullish. Okay, we want price to close above this to continue the bullish structure, and then ultimately take out this. If price can take out this, then we have a new structure to the upside. So this is an example on EURUSD. You can actually do this on any currency pair, any asset class, and any financial instrument. So let's take a look at gold. Before we look at gold, let's look at the monthly, because we have to also look at the monthly. Looking at the monthly, you can see, but just that the monthly, it takes time for it to, you can see, as price keep breaking this, we keep selling. Okay, we keep selling. Your directional bias will be to sell. All right, now immediate price close above, this is an indication that we want to keep buying. All right, and you can see this low, this is the major low, yeah, major opening price here. Whatever you see here is minor order flow, which price took here but failed to take this one, this particular one. Price failed to take it, and right now we have closed above this. So this is a sign that we might continue pushing higher. So So one way or the other, I've already told you the directional bias for Euro USD. We are going bullish. All right, just by using this reversal opening price as a measure of what? Order flow. So let's look at gold and see how you determine the order flow. So you can see from here, to cause the change in order flow, we close above this. We close above this. Okay, so from this point now, you can be looking for bullish price action here. When we close below this, you can look for bearish price action up until the point we close above. Okay, the moment you close above, you keep looking for bullish price action. Okay, that is how easy it is. All right, for you to just determine the overall direction of the market. The moment we close below, you keep selling. Now we trade back and close above this. Now this is the low that we are protecting. Price is pushing up from there. So in this case, we expect price to take out. We've closed above this, so the next one is this. We should expect price to take that. Once price takes that, we can expect price to take this. Okay, so you can see all you need to do is practice more on this, and you see that knowing your direction becomes what? Clearer and even better. All right, even though the month here has not ended. Okay, this is the daily. Today ended, so we should push higher. Then if you look at the weekly, the same thing. The moment we took out this high, this reversal opening price, the moment we took out this reversal opening price, that is the bullish directional bias coming in. We took out this. Now we are trying to take out this. Once we take out this, whatever you see in here is simply minor order flow. This is the major order flow. From here to this point is the major order flow, because this was the low that created this one. So whatever you see in here is a minor order flow until either we have a break below or break above. Okay, so right now we are still bullish because this is the last reversal opening price that needs to be taken overall before we have a change. But so far so good. This is also being respected, and when this particular month end close, we expect it to close above this for us to continue going bullish. The next one we need to look at is the monthly. On the monthly, starting from here, okay, the moment we took out this, then we should know that we are bullish. We sold it below this, you can keep selling for the next month. And where do you want to target for a change? This level, we close above it here. So sometimes you might have the market ranging. When the market is ranging, there are different ways we can gauge direction within the lower time frame. Okay, and in that case, you don't go for swing structure, we go more for what? Intraday or scalping. So in this case here, we close above. This is the key level we need to move, and now price close above. In this case, it is clearer. You start pushing higher. You start pushing higher. Yeah, we push higher here. So this is the range. Yeah, and yeah, this is our range. Major order flow. That is where the money moved from here to this point. So whatever you see in between here is simply the minor order flow, which you can also trade. Okay, just like the way you trade the major order flow. So in this case, a close below, you continue looking for sell until we have a close above. When you have a close above, this finally gave way. All of this went away. So you can see, even when you are within the minor order flow, you can sell from this level. You can look for sell. Okay, you can look for sell. Though we have other ways where you can actually catch a good sell from here, but I'm just trying to show you at a glance how to determine order flow. So the moment this is created, okay, we close above this, we close above this. This is the last major level. Price push above, we close above this, we close above this. So right now we are simply bullish until we create a fresh resistance, which we simply target again, and so on. So you can see how I applied this, using it to determine the market directional bias or order flow. The last example now, I will try it with what indices. So we can look at NAS 100 and use it to gauge the current level. So you can see from here, the moment we took out, now listen, let's start from here. You can see the moment we took out this, order flow is bullish. We took out this is the target you want to take. Price close above it. The price close below this one, no, it rejected. Close above this, push higher. So in this case, all you need to do is to look for bullish price action. We close above this, we close above this. What happened here? We broke below. So this should tell you look for sell opportunities within the market. So this is the resistance that was created. We close below this. Okay, we also close below this. The moment we close above this, that is where the order flow shifted bullish, and then you continue like that, okay, till where price is currently. Okay, so in this case we are bullish, and we took a live trade here. Was it no? It wasn't live. It was live on the VIP, not on YouTube. Okay, and I posted the screenshot. We took a live trade there. So this, for me, this market is still bullish. We keep looking for buy opportunities. Yeah. So if you have any question, put it in the chat, put it in the comment section. And if you are new to this channel, we do live streaming from Monday to Friday, and the weekend we simply look for market analysis. And then we also have a community within the Telegram. You can join that Telegram group. That is where you have personal interaction with me. I will answer your questions. I'll try my best to throw you in the right direction. So make sure you like this video, subscribe, share this video so that you can also be helping someone out there.